And I tell you what, when I first started Snipers, this was what it was going to be about. You know, doubling your money with high probability in a year with long-term credit spreads. Anybody interested in that? Well, it's actually maybe a bit counterintuitive. We can go out there and routinely find trades that offer 4 to 5% return on investment with 95% probability of making it all day long. There's a lot of them out there. And so if you want to get behind this system, you know, get that if we can make 4% or even 5%, somewhere between 4 and 5% every 14 days, then if you do that and you size it, you're making 4% every 14 days, you could literally make 8% every month with the same money. And so this represents that if you take $5,000 and you make 4% twice on the same 5,000, because the whole time is only 2 weeks, then look what happens at the end of the year. You make $4,800, $400 a month on 5,000. You make $4,800. You make 4.2%, I think it is, and you double your money. So I kind of had lost sight on this, and then we have, we have a couple people in our community that really dug in. Jeff Kotkamp and Carla Graff. They've been trading this live, and Carla's actually around 5% every 7 days. Jeff's at around 4% every 14 days. So somewhere in that neighborhood is what they're doing live and in backtest as well. So that's the idea. It doesn't take a lot of time to find them. It takes virtually no time to manage them. In fact, if they work, you don't have to touch them if you follow the system I'm about to show you. Now, the important part of this one is you want to find stocks that are going to go up. And we can find stocks that are going up. But for me, one of the things I want to lean on are stocks that have dividend growth. And so what does that mean? That means the company is paying part of their profits to shareholders. And if they're increasing how much of their profits they're giving away to shareholders, you can be darn sure that that stock, that company is fundamentally sound. It's going well for that company. So we're going to use a dividend growth ranker. It's not the only way, but for me, I think it's a good way. So in Tom's tools, if you have Tom's tools, you go to stocks, stock analysis, dividend growth. Now, to further the likelihood that you're dealing with a really good company, we're going to also confine our search to the S&P 500. Why? Those are the 500 biggest market cap companies in the United States markets. And for that reason, and by the way, to get in the S&P 500 index, you got to be cooking with gas. The company has to be doing really well in order to be in the S&P 500. So again, I want to find the most healthy, highest dividend paying, dividend increasing companies before I take on selling a put spread on that company. Now, once you get to the dividend growth ranker, I'll do this all in a minute. There's a lot of different things you can rank by, but this is one I like because it looks for total change. It looks for dividend growth and stock price growth, meaning the stock's rising and the dividend growth is good or increasing, and then it gives you a combination of both. You can also go out here and rank by other things as well. So when you go into this dividend growth ranker, you select rank by total change, S&P 500, and then search. And then once you have that, take the top 25 of them and save them in my stock list, and then click replace. So after this process, you'll have 25 stocks that have every reason to go up, but certainly not drop. That's all we want. go up preferably, or not drop so much. In fact, you can drop, 95% probability that the stock's not even going to even reach your short strike. That's the whole idea. All right, let's do it. So that Tesla trade is filled. I'll put that on the boards here in the forum a bit later. So let's go in and do all of that. Stock analysis, dividend growth. If you want to get an idea of what all these rankers are, click your help button, and it'll tell you all you need to know, or maybe even want to know about this scanner, including all the different settings. This is the one I like, listed in order of largest dividend payout plus the stock price change relative to the entry price at the beginning of the earliest year. All right, so that's looking for movement as well, and that's why I like it. So let's go after the S&P 500. Let's hit search. And look at the stocks on the list. Carnival, I wasn't expecting that one. We don't have to look at any of these just yet, but notice there's some big names on here. Let me do that again. That doesn't make sense. Let me see. Oh, I had the wrong one. That's why. There we go. I forgot to click this here. All right, NVIDIA, Eli Lilly is a sleeper, y'all. I've been talking about Eli for a while. And now, after great earnings, it's breached this resistance level of 560 and off to the races. I like that one a lot, actually. Let's look at Lilly. That would be a nice long-term credit spread. Let me restore my moving averages here. I took them off to show you cups. Cup and handles. Let me just refresh this 50, 200. And my fast average is going to be red. That's what I like. If you're playing along, go ahead and look for some stuff that you like. I've got some ideas, but I'm always interested in what y'all think. And Gerardo, if you see any trades pop up, please interrupt me. Now, I want the 200 on the chart. Ideally, on any stock we pick, I would love to sell a 400 put spread on this thing. I want the stock above the 200. I want the stock rising, preferably. I want the stock above the 50, above the 200. Ideal world, we sell here at 400. Not so far away, I doubt we'll do it. But I don't have to worry about it just yet. Let me take the top... Well, let's take the top 25 here. So then I'm going to take the top 25 of all of these, and I'm going to add them to my stock list. So what you do is you find my stock list in your list here. It's a list name you can't change. It's a temporary holding list that's used for this purpose. Click replace. And then you go to searchers, single strategy, and put credit spread. And then select long-term. Actually, you know what? We can do it that way, but there's another way. Let me do it this way first. Long-term, out of the money, put credit spreads. Select my stock list. These are the 25 high dividend growth, high bullish stock price movement stocks. And then on the top of the list is Microsoft. Okay, this one's showing Microsoft. You can make, you have an 87% probability of making 15.74%. Let's take a look at the chart on Microsoft. Now, Microsoft's kind of going sideways. What? I'll show you. Let me show you this. This is crazy on Microsoft. I learned this from somebody I was coaching, a good friend of mine. If you do a max chart on Microsoft, I mean, this sucker goes up over time. It will go up. Well, history it has. Look at Microsoft. You know, there's This is this year. It's moving closely with the market, but this thing is such a bullish stock. And it's, although it's not at its, all-time high, it's pretty close. All-time high on this is 366. The stock's at 336. So Microsoft is a juggernaut, and I would put this one on your list for long-term credits for sure. So on Microsoft, if I could sell down here around 290, that would be ideal.